Welcome to the ARMR Report, guys. Thanks for being here today. It's a Wednesday. Always glad to have you. ARMR stands for Algorithmic Risk Management Research. This is a show about quantamental investing, a combination of quantitative execution, which is AI, computer learning, combined with a fundamental foundation, and that's the information edge I try to share with you every day. Today, the topic is precious metals, gold and silver stocks. Why are we buying gold and silver stocks? Why have we been sharing with you for the last couple of weeks the importance of gold and silver stocks in your portfolio? Okay, we're going to walk through a timeline, and I'm going to share some big picture thoughts on the metal, and we're going to drill down into the ETFs versus individual stocks and what we think we're going to do now. So how are we going to take this big breakout in gold and silver stocks to the next level? What are we doing in our portfolios? We're going to address all that. All right. Before we get started, as always, we got to go through some of the ground rules. Okay, so it's a live trading desk. I got computers all around me. Phone might ring. I might have to execute a trade. Forgive me. This is a live look-in for you for what I do every day managing my own capital. So this information that I'm sharing, I use in my own portfolio. I use it for investors that I work with through our Interactive Brokers relationship. And then I use this information for the ARMR Report subscribers, which I like to call ARMR Insiders. You become an ARMR Insider, you get access to information like what stocks we own, the price we bought them, the date we bought them. We talk about our stops on positions. You get one-on-one access to me, pick up the phone, we can chat, and I can drill down more specifically into the risk management part of your own portfolio if you want that knowledge. Okay, so I'm not telling you what to do today. I don't know you, right? So certain things on YouTube like this, I have to keep kind of big picture because we're all different investors. And unless we chat one-on-one and understand really your risk tolerances, it would be hard for me to really tell you what to do. So I just share with you what I'm doing in my own portfolio, and I hope that you can learn from it, can put yourself on my shoulders and reach higher. That's what I'm trying to do here. Okay, let's have some fun. Okay, let's have some fun. We've absolutely nailed the precious metals part of our portfolio. We've put the capital to work at the very start of the phase 3 up, or wave 3 is a better way to put it, up in this new bull market cycle for precious metals. Now let's don't get lost in the weeds when it comes to waves and Elliott waves and all this kind of thing. But let me just say, basically for new investors who've not heard of Elliott wave, it's a great idea to go research it, read about it. Don't get too lost in it. It's not the end-all be-all. It's just another piece to the puzzle. And bull cycles tend to unfold in a 5-wave process. Wave 1 is the initial breakout. Wave 2 is the pullback to test, is that breakout real? Wave 3 is the beginning of the real exciting action. And it's the biggest move of the bull run. Wave 4, another pullback, and wave 5, the finish. That's basically how waves work. So, on the 10th, on February 10th, everybody who's an ARMR Report Action Alert subscriber, that's a free subscription. Okay, so you can go to the armorreport.com, which is ARMRreport.com, and subscribe. It's free. All of my subscribers received on the 10th the top 3 charts of the week. And those 3 charts focused on the big picture fundamentals of gold and silver, precious metals in general. I wanted to try to raise your awareness of the importance of precious metals as a piece to a portfolio. Look, guys, I'm just like you. I go out there and I look for knowledge wherever I can find it. And I find different resources and I subscribe to the free subscriptions. And then I immediately unsubscribe when I realize all they're doing is throwing up into my email box every day, every week, a whole bunch of useless information. So when I started my own action alert, I made a commitment to myself and to you. I'm only going to put something in the mailbox if I think it's actionable. It's an ARMR action alert. If I think it's real, if I think it's something I'm doing in my own portfolio to either manage my risk or to capture upside. I don't guarantee a free email every week. I don't say it's going to come every day, every morning, once a week. I don't know when it's going to come next. I'm going to send you the next ARMR action alert when I have information that I think can make money or save money. That's it. So on the 10th, I sent you guys a report. I said, please look at the importance of the unfolding bull market in precious metals. Gold and silver have turned a major corner. Last year, on the 31st of May, was the original breakout, the beginning of wave 1 up. And I suggested to you on the 10th, we'd completed wave 2, and the move higher now into wave 3 is beginning. And then on the 12th, I came right on this channel and I shared that information with all of you. I said, please look at what's going on in the space. And I said to you, Barrick is going to announce earnings, one of the largest gold companies. The symbol's GOLD. And in our opinion, on our trading desk, based on the research we're doing, we think it's possible they're going to beat on the top and the bottom line. And I said the major reason for that was that we've reached peak gold production. It's now headed down at a time where demand is headed straight up. That was one of those charts I sent you to look at. Okay? Now, gold and silver production is not as easy to ramp as, let's say, energy, right? So when demand skyrockets for energy, the Saudi Arabians just start pumping more. It's not like that for gold. It takes time. It takes capital commitment. You got to do all the things to bring the ore to the surface. Why is it in decline now? Why have we hit peak production? Because we went through a 10-year bear market that was brutal. So all these companies did what they could do to create a financial support around their company and make it through the tough times. So we're in that sweet spot for the next X amount of months, maybe years, where production's heading south and demand's skyrocketing, particularly because the last couple of years, central banks have gone from net sellers to net buyers of precious metals. Now look, I could talk to you guys for hours on this topic. Not going to do it. Got 30 minutes. Okay, but let me just explain. In 2008 was one of the best years for me as a professional. And the reason was we had a big allocation to precious metals as a hedge on our portfolio, starting in 2007. So when the market imploded and there was a financial crisis, those stocks picked up the whole portfolio. We ended up profitable that year. Now, the reason I say this is a great hedge, it comes from experience. The beauty right now is that these stocks are going up with the market. The market's up again today. Nasdaq's up 1%. GDX is up 0.5%. GDXJ is up more than 1%, 1.25%. So we're in the sweet spot right here. We're a hedge that will protect you from financial disruptions that we never know is coming around the corner. And you wake up in the morning and you find out something happened overnight. These stocks will protect. the asset gold and silver will protect. You can have it in the portfolio and make money while the market goes up. That's a win-win. So this is why I've been saying to you, we've got to focus on the space. And so Gold Corp came on, Barrick Gold, GOLD, came out with earnings. They beat on the top line. They beat on the bottom line, just as we anticipated. Because you see, as peak productions occurred for the industry, for Barrick, production keeps going up because it's a really well-run company. And I submitted to you then that if Barrick showed better than expected earnings and revenue, it would be the ignition that launched into the third wave up. Because institutions, don't forget, information makes money, institutions make markets. We want our capital to be in the vehicle that institutions come in. Institutions manage billions of dollars. My money and your money doesn't put a stock up. It's when institutions decide to come into a space and into a stock, they can drive that stock up over time at a 45-degree angle with typical volatility. So it's our job to put our capital to work in an investment right when the institutions start coming in. And that's why I said to you that if Barrick can beat those numbers in the top and bottom line, it's going to bring in institutional investors. They're going to start to see that these are earnings stories. They're earnings stories. They pay dividends, the ones I've talked about, right? And I'll talk about it again. I'm going to get into it in a minute. That's why those are the stocks that we're focusing on first in the ARMR portfolios. You can go to the armorreport.com, ARMRreport.com, subscribe, and you can see all the stocks we own in the ARMR portfolios. Okay? So here we are today, and I'm on here talking to you again. Why were we so committed before, and what are we going to do now? What I want to share with you is a basic chart, long-term, of gold and GDX. I want you to see this because a picture is worth the proverbial 1,000 words. Oh yeah, guys, don't forget. If you like what I'm saying, give me a like. Hit that like button. Really helps me out. And if you haven't subscribed yet, right down there you can subscribe. And I also gave you a link to the armorreport.com if you'd like to subscribe there. So let's get rid of these pictures. Okay, now take a look at this. What you're seeing now is a chart of gold, a weekly chart of gold as represented by the ETF GLD, going back to the peak in 2011. That, my friends, is a brutal bear market that lasted literally, okay, it bottomed right in here in 2015, then it meandered around. And this is right here. You guys can see that. Let's draw it real quick. Okay, this is the breakout I'm talking about. Right there is when it started. That's May 31st of last year. Now, these three yellow lines are basic Fibonacci trends. The theory being here, when you break the third trend line, the real reversal is intact. It has been created. A reversal has occurred. Let's put it that way. You break the first downtrend, that's great. You break the second, it's productive. But when you break the third, a whole new uptrend has begun. So we had the initial run up, that's wave one, the pullback to support, to test, wave two, wave three has begun, and hopefully you're on it with us because of this channel that you've been watching. Now, I want you to look at GDX. Take a look at GLD. It's blowing out to new highs. That's gold. GDX hasn't even started yet, guys. Holy smokes. Holy smokes. Look at that. I'm going to go let you see it again, but I just had to say it. Look at GDX. Gold itself is already making new highs. The gold stocks are literally just beginning. Take a look. There's the downtrend. Weekly chart now going back to 2011. 1, 2, 3. This is the week. I mean, we'd like to see GDX close at a new high by the end of the week. That would be key. I don't know if it's going to do that. And nothing ever happens exactly the way we want. So, who knows? But that would be somewhere up around the 31.5 level. Okay, and GDX is still trading at 29.48. Okay, but these charts, I hope, illustrate for you why I've been focusing on the space and how early it is. How early it is. Now let's look. Let's look at, there's different ways to invest. So how do you invest now? The question is, how do you invest now? I want to show you the leaders in the space and why we've been focusing our big cap dollars on the leaders. We originally bought GDX. That was our first investment. We made some money in that. But upon further review, it became clear to us that the guys who are seeing production increase while the industry is watching a peak production and production rolling over, the guys who are still increasing production, those stocks will perform the best in the big cap arena. Okay? So we shifted our dollars, and we told you all this, I think it was 2 weeks ago, that we've booked a profit in GDX and we're moving to our favorite big names. And of course, we talked about Barrick Gold, so I'm going to share it with you again. Again, I'm not telling you what stocks to buy. I'm certainly not telling you to run out and buy Barrick Gold today. Stocks already, skyrocketed. But I just want to share with you what fundamental research and information can do for your portfolio if you've got the right information. Let's take a look. Don't forget this chart right here. That's GDX, right? So this is all of the big cap stocks in an ETF. Now look at gold, GOLD. Oops. Watch this. Oh, GOLD's already broken out to a new high, right? So it's leading GDX. Now take a look at Newmont, which is the largest holding in GDX. See, that's already broken out and taken out the highs really of 2016. So GDX to take out its high of 2016, okay? So it's that 31.5, 32 area. But the leaders are already breaking out. And then here's FNV, Franco-Nevada, which is the third largest. Holy smokes, that stock is in a runaway. Okay? So I'm not telling you guys what stocks to buy. I'm just showing you the three largest names that are in GDX. The leadership has already broken out to new highs. So you would think GDX would follow. I think that would be a fair assumption. The reason it hasn't yet is that certain companies, like Royal Gold, for instance, let's take a look at Royal Gold. I told all ARMR insiders the day of earnings that we were removing this stock from our portfolios because our information was telling us from our own fundamental research that the risks were higher, that they were going to miss their earnings number, miss their revenue number. So the reward to risk was not right for us. And I let everybody who's an ARMR insider know, you got to lift. We're lifting this out of our portfolio because the risk reward's not right. Take a look at what happened to the chart. Okay? Now let's drill down. This is a weekly chart. Let's go to the daily, and you can see what I'm talking about. Okay? Right here is the earnings announcement. I'm just going to give you a... Okay? That was the day that we said we got to get out of this stock before they announce earnings tonight. And then the next day, they announced earnings, and as you can see, the stock broke down. Okay? Now, it wasn't a huge breakdown, but they missed the number on the top and the bottom line. because as our information we had gathered was telling us, they were having an issue at one of their mines. They're going to miss the number. They missed the number. So that's another part of GDX. Now notice the stock didn't go down a lot, and that's because the leaders are blowing out, the price of gold is going up, and I'm sure Royal Gold will eventually fix their issues, and that stock will take off. Because we're at the beginning of a phase or wave 3 higher in the whole space. But for my money, I like to focus on the leaders. I don't like to buy the laggards. Here's another example of a stock that missed the number. Okay, look what happens when you buy a laggard. Okay, Agnico Eagle Mines missed the number. Production's going down as opposed to GOLD, that's production's going up. They missed the number. The stock craters. Okay, so those type of ideas are the ideas that are holding back GDX in general. I think they'll recover. I think the leadership is showing you that the whole group's going up. So we're focused there. What I'm going to be doing for all ARMR insiders, guys, I'm talking to you right now. I'm going to do an eyes-only video probably this weekend where I'm going to share with you the smaller and mid-cap stocks that our research desk likes right now and the reasons why. I don't like to talk about small and mid-cap stocks on YouTube. This is not a channel about promoting ideas that I happen to own. Okay? I'm trying to share with you big picture, trying to share thoughts with you to help you manage your portfolio, manage your risk. As an ARMR insider, we can drill down a little bit more. Okay? So guys, look for that video. It's coming. There are specific stocks that we're going to own. And the reason we're going to own these smaller and mid-cap names is that when you have peak production rolling over now, demand starting to skyrocket, and it takes a while to bring a new mine online, what we think is going to happen eventually will be a consolidation in the space, which means the small and mid-cap guys get bought out by the big guys to increase their production. Okay? So what we've done right now in our portfolio, as insiders know, armorreport.com, go to ARMR Portfolios and you can see what we own. We've focused our small to mid-cap buying on just GDXJ. And take a look at this, guys. Okay? GDXJ. Okay? So it's the small and mid-cap miners. You can see these are actually breaking out ahead of ahead of GDX. These guys are breaking out ahead of GDX. But you can see the charts are very similar. And I'll go back to a weekly chart just to show you guys real quick. Let's go back here 10 years and get a quick picture. See, same thing. You haven't missed anything yet. If you look at the big picture, these stocks haven't even started to go up. Okay? So we're early here. There'll be chances. There'll be backing and filling. Right now, for the small and mid-cap space, with my own capital, all I own is GDXJ, because I want to get the whole space right now. But we're doing research on these small to mid-cap names, and we're building a list of the stocks we're going to want to own. And so just like in GDX, where we shifted over to GOLD and Newmont, we'll probably shift over at some point out of GDXJ into the names that we feel are the best to be taken over. In order to get that information, you got to become an ARMR insider. You can subscribe. Go to armorreport.com. It's right down here. Just click on it. And for those of you already subscribed, look for that probably in the next week or so. I'll have wrapped up the research we want to do, and I can list some of the names that we'll focus on. That about wraps it up for today, guys. I hope I've given you some food for thought. Okay? This is about, as always, managing risk. So never take a conversation or an enthusiastic, exciting conversation from me as a reason to run out and buy everything. Okay? Don't forget, I'm sharing information with you. You guys know from the last 2 weeks, we put this money to work weeks ago. So we're already making money right now. I'm not running out there and buying any gold stocks right now. Okay? If you haven't bought them yet, that's okay. This wave 3, I keep calling it phase, this wave 3 up doesn't mean it goes parabolic. That's usually wave 5 at the end. They'll be backing and filling, and you'll have more than enough opportunities. Be patient. D. Gardner, I don't have an opinion on Fitbit stock, but I can look into it for you to take a peek. I've looked into it before. I haven't had any interest in it. I don't see the reason to own that stock, but I'll take a look if it's something you have an interest in, and I'll get back to you if I think it's worthwhile. For me, I mean, certainly you can do whatever you want, but I'm saying for my capital, I'll go take a look. Guys, I appreciate your time with me. Don't forget tomorrow morning, I think it's tomorrow morning, maybe tonight, Newmont Mining announces earnings. Okay, so we'd like to see another good number there. We'd like to see them beating on the top and the bottom line. Okay, hopefully they'll be doing the same types of things that Barrick Gold is doing, and if they do, it'll just add more fuel to the fire. You know, if their quarter's not as good, probably brings these stocks down a little bit. That's okay, great. Give us an opportunity to add to it. But I suspect that Newmont is in the same financial position as Barrick. Okay, so we're looking for those types of results. I will, I'll be on Twitter at Brett Rosenthal, tweeting my opinions of the Newmont announcement. I'll be listening to the conference call, and I'll let you know if there's anything interesting in there. When's the cannabis couch coming? Southeastern 99. Okay, I mean, you know what? Let's do a cannabis couch. Let's talk about it on Friday. During our weekend review, I'll go over what we're looking at on the cannabis couch. We're still focused on innovative properties. It's our number one stock. It's up over 30% so far this year, and we're picking up a 5% dividend yield. Okay? I've been doing research and work and building a position. I've started to build a position in a small cap stock, in the U.S. cannabis space that I cannot talk about on YouTube. It's just not. It's not liquid enough. I don't ever want to be on this channel talking about something that drives the stock up. That's not what this channel is about. If you want to know what I'm buying, unfortunately, when it comes to something small like this, you're going to need to be a subscriber. So all ARMR insiders, you can certainly go to ARMRreport.com right now, ARMRreport.com. Go to the ARMR portfolios and you'll see this new stock. I added it to the whiteboard. I've added it to a portfolio. I'm beginning to build a position in a U.S. cannabis company that I think can be a very big stock for us over time, and it fits nicely right next to our IIPR position. But anyway, I will talk to the cannabis couch on Friday, and we'll go over some thoughts of what I'm going to do with the whole space and some of the bigger names. I appreciate your enthusiasm, guys. Thanks for being here with me as always. Don't forget, give me that thumbs up. It would really help me out if you can. Okay? Subscribe if you haven't already, and I'll talk to you guys again 11:30 Friday. Take care, guys.